Hello and welcome to this very special pre-budget interview on money control. I'm Mahalakshmi and I have with me the chairman of the Economic Advisory Council to the Prime Minister of India, Dr. Bibek Debroy. Dr. Debroy, thank you so much for this opportunity.
Pleasure.
So you wrote in August in Money Control that India has an imposter syndrome at a national level. And today, if you really see, this year has really been very good for India in terms of, GDP numbers, whichever way you look at it, tax buoyancy, stock market performance with respect to the rest of the world, all of it is good. But underneath, there is a feeling that there is a lot of, the headline numbers really hide a lot of uncertainties, vulnerabilities. Would you agree? And that's really the source of this skepticism or insecurity or whatever you may call it. Do you agree?
It's almost like a blanket statement. Uncertainty vis-a-vis what? There is a lot of uncertainty around the globe. The COVID itself was an exogenous shock. There is still uncertainty about the way COVID is rolling out in China. There is uncertainty geopolitical about what is happening in Russia, Ukraine. There is uncertainty about the protectionism that is happening in the rest of the world. Some of it predates COVID. There is uncertainty about the future course of economic growth and development in Europe, to a lesser extent in the United States. There is even talk of a recession. India is not an insulated country. There is going to be volatility in the forex market, there is going to be volatility in the capital market, the exchange rate is going to be subject to volatility, and of course, as one of the main sources, one of the four sources of growth, of real growth, the exports, net exports, do not seem to have that silver lining anymore. I don't think there is any great uncertainty within the country. The uncertainty that you are talking about is outside. And I repeat, India is not insulated. The two are not separate. So far as the government's economic policies are concerned, in some sense, there's been a continuity of the policies followed since May 2014. In between, COVID took a toll for 2 years. I don't think there is any great uncertainty about the government's policies. In fact, the government's policies have been designed to curb any domestic uncertainty. So therefore, I would not quite buy that entire argument if I've understood you correctly. Post-COVID, yes, COVID left its toll. It left its toll not only in terms of mortality, it left a toll in terms of morbidity, in learning outcomes. We've essentially lost 2 years in pursuit of the development trajectory. Post that, the recovery has been fairly robust. And if one looks at the other three drivers, consumption, investment, government expenditure, one is not really just talking about real growth in this particular fiscal year, which not just government, even external observers suggest will be between 6.8 to 7%. If one looks at prospects for real growth next year onwards, I don't think there is any great uncertainty, except it is uncertainty to the extent that is foisted on us from outside.
Sure.
And that also applies to commodity prices. And a large part of the imported inflation was because of increased commodity prices. Even that has muted a little bit.
Sure. So more than uncertainties, I was talking about the vulnerabilities. Essentially, I was referring to the K-shaped recovery that we have been talking about post-pandemic, which, not that it's not there elsewhere in the world, but it seems to be a lot more pronounced in India.
I don't know what that means. People bandy about the expression K-shaped recovery. I have no idea what it means, because no one has ever attempted to clearly explain what it means. If one is talking about a recovery, the recovery has been fairly robust. So unless you explain to me what you mean by K-shaped.
So to my understanding, it refers to the fact that, lower strata of society, for example, today, if you see the narrative that is coming from big companies like HUL or Nestle or any of these companies, they say volume growth is not happening in rural areas. If you look at the MNREGA figures, there is obviously want for more jobs out there. So that section of the society, you look at urban remittances, those numbers don't show that, the recovery has really happened to pre-pandemic levels. So I guess that's what the headline numbers seem to
All right.
camouflage.
So you are talking, when you are using the expression K-shape, you are referring to inequality.
Right.
Now, inequality is a technical term. We do not have distributions, income distribution data in India ever. We do not have data on the distribution of consumption expenditure satisfactorily after 2011-12, because the last NSS data on consumption expenditure is from 2011-12. A lot of people will quote the World Inequality Report and will say inequality is increasing in India without failing to note the source of data in the World Inequality Report. The source of data in the World Inequality Report is from 2011-12. The only data we have on consumption distributions is the PLFS. If I look at the PLFS for 21-22, and this is consumption expenditure distributions, it does not suggest any squeezing at the bottom end. It suggests a squeezing in the top decile. And I repeat, the squeezing has happened in the top decile, not at the bottom decile, not in any of the other deciles. And this is hard data for rural India as well as urban India. So let us be very clear about what we mean. There is a problem that is global in nature. And that problem that is global in nature is one of growth no longer being as employment intensive as it used to be. In India, the employment elasticity of growth used to be 0.5 2 decades ago. It is about 0.2 now. This is not a phenomenon that has happened since May 2014. It's a phenomenon that's been going on before that. So there are legitimate concerns about employment. There are legitimate concerns about urban unemployment or lack of employment opportunities. There are legitimate concerns about the fact that manufacturing today is no longer as employment intensive as it used to be. So there is an employment problem. Now, if there is an employment problem, then, and we can discuss the reasons as to why there is an employment problem, then obviously migrants who went away will not return. If migrants don't return, it is but inevitable there will be a greater demand for MGNREGS work. This does not suggest that there is any large-scale inequality issue in the country. There is an employment issue. So let us not trivialize it by using expressions like K-shaped or saying that inequality has increased in India, because factually you will not be able to prove it. Yes, there is an urban employment issue.
Sure. No, I think we are just basing that on the fact that, most of the companies come up with this narrative during their results. I mean, you talk to most big companies, that's the narrative you get to hear, that rural consumption is going down. That's where the pain seems to be. The other part of this...
I will not respond to big companies, because the moment you say big companies, it is not a representative sample.
So that's the next part of the question, that, even in business, you see one trend that has emerged post-pandemic is that larger companies are getting larger, smaller companies are getting marginalized, and there is a lot more stress at the SME level. So are these, vulnerabilities, do you see these as becoming impediments to growth as we move forward?
I think one has to bear in mind the following, that some of what you are ascribing to the pandemic is not a result of the pandemic, it is pre-pandemic. Because the churn in the so-called MSME sector is pre-pandemic.
In
fact, it goes back,
GST.
Even before that, it goes back to the days when quantitative restrictions on imports were eased. It goes back to the days when small-scale sector reservations went away. And therefore, what we used to be called SSI then and subsequently MSME faced the crunch. And then, of course, there was GST. The fact of the matter is that something like GST is inevitably going to lead to churn.
Right.
If my competitiveness is solely based on the fact that I am not paying taxes, and now because I am being brought into the GST net, I have lost my competitiveness, then in the process of that churn, there must be exit. The most serious issue is the fact that there has been a credit crunch. That, I think, has had much more to do with the MSME sector in recent times not doing that well. It also has to do with the fact that when one is talking about the recovery and one is talking about the rural sector and the urban sector, one of the earliest avenues for rural migrants to get into is the construction sector. And as a result of the cleaning up, and the cleaning up, no one denies that the cleaning up is and was desirable, the cleaning up has affected both the construction sector. I am referring to RERA. So, in addition to GST, there was RERA. And also one must ask oneself the question that if the real sector grows at something like 9%, and I'm using 9% as an example, should the growth of the financial sector be 19%? The growth of the financial sector cannot be disproportionate to the growth of the real sector.
Right.
And if there is a reality check, if the financial sector is subjected to some constraints now, if in the process of cleansing, the indiscriminate loans that were extended earlier are not going to happen. If promoters are going to be asked to exit finally as a result of the IBC, then there has to be a cost. But yes, there is a problem with MSME, but all I am saying is I would not ascribe it per se to the pandemic, except to the extent that construction has not, sometimes when we are reacting with lagged data. Right. And construction, the data will soon show that construction has also begun to recover, or some varieties of construction has.
Fair enough. So the question was, I mean, do we have to go through this pain period? Do you think it's going to become a threat at some stage, or this natural cleansing process is
No, I think it all depends on the benchmarks. Is the benchmark real growth of 9%? Is the benchmark real growth of 7%? If the benchmark is real growth of 9%, then given the uncertainty you talked about in the external sector, we cannot possibly get 9%. The question really to ask is the cleansing over or do we need some more time?
Right.
Typically, what the government has done are described as economies as supply side. The supply side changes. Earlier we have data, particularly for the infrastructure sector, earlier data. On the basis of that data, the changes come into effect after about 2 years. The relevant question to ask is, are those 2 years over, or is it going to take a little while longer? Now, one school of thought is that we have been through 2 years of dislocation as a result of COVID, and therefore that churn as a result of the cleansing and otherwise is already over. And the other school of thought is, no, it's not over, we have to wait for a little while longer. Now, on that, your guess is as good as mine. I'm inclined to think, as I said, it's based on the benchmarks. I'm inclined to think that despite all of these constraints, we have not talked about real growth in next year. We've talked about real growth this year. Despite those constraints, I think real growth next year will be of the order of 6.5%. It won't be 7.5% because of the things we have talked about, but there is no reason why it should not be 6.5%.
Sure. So overall, what do you expect? Inflation will taper off at 5.5%. And what does it mean for tax buoyancy?
Well, So far as inflation is concerned, it also depends a little bit on the indicator we're using of inflation, whether it is the WPI or the CPI. So far as budget calculations are concerned, what is pertinent is the GDP deflator, which is a weighted average of the WPI and the CPI. I already mentioned that inflation has become a little bit more muted. This does not mean that suddenly crude oil, the food inflation part of it was due to some temporary dislocations. Those I think are over. We still have the imported inflation, and one still doesn't know hypothetically what is going to happen to crude prices.
Yeah.
But as of now, the inflation numbers are not as bad as they were. They are probably not in that range of 4 to 6%. Well, in the 4 to 6% band that the RBI has, they are not towards the lower end, they are indeed towards the upper end.
Right.
So far as the budget calculations are concerned, the budget calculations are done on the basis of nominal growth. They are not done on the basis of real growth. We can deduce what the real growth is going to be. So far as the GDP deflator is concerned, I am not privy to the budget numbers. The budget numbers we will have to wait and see. I would expect a nominal rate of growth in the budget, because it's for a budget, it is best to be conservative. Even the year that is just over, the nominal rate of growth assumed in the budget was lower than what eventually materialized. Exactly similarly, this year also, I would be somewhat surprised if the budget assumes a nominal rate of growth of more than about 12.5%. I think it will be a little bit higher, but so far as budget purposes are concerned, I would expect a nominal growth of 12.5%. So far as tax buoyancy is concerned, there is the direct tax part of it and there is the indirect tax part of it. The indirect tax part of it is largely outside the budget because it's the purview of the GST Council, the GST part of it, which leaves direct taxes. Now, direct taxes, there is a big gap between the number of people who submit income tax returns and the number of people who pay taxes. And we can talk about that if you want, but both of these have shown some increase.
So, do you think this year's tax buoyancy can, what level do you see for next year?
You mean the actual numbers?
Yeah.
No, the actual numbers, it is impossible for me to hazard.
Because a big part, the FN has also said that, significant part of it is because of compliance post GST, and that sort of keeps on getting better every year.
You see, look, what the budget is going to project in terms of tax revenue, it is impossible for me to hazard a guess because that will be based on what changes there are in the budget.
Sure.
But if one assumes a nominal rate of growth of about 12% or thereabouts, the tax revenue growth on an average, I'm qualifying this again by saying it depends on what changes are brought about in the budget, would probably be of the order of 14.5% or thereabouts. Having said this, there is a difference between tax evasion and tax avoidance. Tax evasion is illegal. Tax evasion is illegal, and indeed the scrutiny that has happened both on the direct side as well as the GST side has led to a reduction in tax evasion. I am not suggesting for a minute that it has been eliminated, but it has definitely come down. Tax avoidance, unlike tax evasion, is perfectly legal because I am availing of exemptions. And I think the big agenda on the direct tax side, which is still pending, is the removal of exemptions both on the personal income tax side and on the corporate side. In the case of either, there have been options given both to the corporate sector and to the personal income tax side. And I should repeat that the non-corporate enterprise actually pays personal income taxes. MSME, you mentioned, those are under the personal income tax route. Both categories have been given two channels or two options. One is, do I opt for a system that is without exemptions, or do I want to stick with the present system of one that has exemptions?
Correct.
India is not going to be in a position to suddenly say overnight, I'm going to switch to a system that has no exemptions at all.
Correct.
Although ideally an exemption-less system increases tax revenue, it broadens the base, it reduces compliance costs, it reduces litigation. What one therefore needs to do, and I hope the budget does that, which is to incentivize the movement from the system with exemptions to an exemption-less system.
Sure. You see some of that happening in this budget. You see tax cuts.
Not tax cuts. I did not say tax cuts.
So how do you incentivize and get away to a more...
I did not say that the budget will do it. I said I hope the budget will do it. So let us wait and see what the budget does.
Sure.
And I repeat, I hope the budget does something to incentivize.
But what is the government's thinking? I mean, are we in that direction that we want to move in a certain time frame to an exemption-free era?
Yes, because that is why, precisely why the scheme was announced in an earlier budget.
Right.
In the hope there would be sufficient takers. We know that there have not been sufficient takers, which obviously highlights the problem that I just mentioned. There has not been enough of an incentive to switch to the other system.
Sure. So, looking at the scenario right now, I mean, do you see any levers for increasing revenue in the current scenario? Are there any pockets?
Revenue means tax revenue or indirect tax revenue. Indirect tax revenue, of course, is a different kettle of fish. Now, so far as direct tax revenue is concerned, indirect taxes, as I said, is under the purview of the GST Council.
Correct.
When GST was first floated, there were various computations on what would be the revenue neutral rate, which means what average rate would give me the same revenue as was the case earlier. Those calculations of the revenue neutral rate were then at about 17%. It might have been a little bit higher. The fact of the matter is that the average GST rate today is around 11.5%, even lower as per the RBI. It may have come down a little bit now. So on the GST side, as a whole, we have lost revenue. It is not a revenue neutral rate. Most consumers want the 28% rate to come down, but they are unwilling to concede the fact that a simplified GST means a GST with fewer rates, which means not only does the 28% have to come down, the 0% also has to go up, the 3% also has to go up. But as I said, that's under the purview of the GST Council. On the tax side, 2 or 3 principles are evident to every economist. One, the public expenditure multiplier is greater than a tax reduction multiplier. So if I want to stimulate the economy, it is far better to do it through government expenditure rather than through reducing taxes. I'm stressing this because at the time of the budget, it is invariably the expectation of many people that it should reduce taxes. I'm not direct taxes. I'm not talking about tinkering with slabs. That's an exemption limits. That's a minor issue. The second issue that is evident to every economist is that the multiplier effects of capital expenditure are much more than those of revenue expenditure. Since COVID happened, there were a lot of pundits who suggested that the government of India should increase revenue expenditure. In fact, introduce tax reduction also. This government since May 2014 has been remarkably conservative fiscally. With the exception of the free food, which is an extension of the subsidized food scheme, there has been no increase in revenue expenditure as a result of COVID and its consequences. Instead, the government has increased capital expenditure. The challenge before the finance minister, the challenge before anyone making the budget is to ensure that that capital expenditure continues, because that capital expenditure is necessary to directly trigger private investments and indirectly to trigger even consumption. That's the multiplier effect. The challenge is because revenue expenditure is always sticky downwards, and so far as the budget making process is concerned, most revenue expenditure is exogenously given. You cannot do very much about it in the short run. And something like food, subsidized food, it has a legislative content. So you cannot do anything about it without amending the relevant legislation. Simultaneously, the fiscal deficit is important not because one makes a fetish out of the numbers, but because it is important for the government, in this case we are talking about the union government, to be in a position to repay its debt.
Right.
That's the reason the fiscal deficit is important. This year, the fiscal deficit as a ratio of GDP was projected at 6.4%. The finance minister is on record saying that in 25-26, she wants to reduce it to 4.5%. So therefore, it has to be reduced by at least 0.5%, perhaps even more this year. Otherwise, that target is not going to be a very credible target. So this is essentially the challenge, that how do I manage this? I'm stuck with several forms of revenue expenditure. I want to increase capital expenditure. I have got the fiscal consolidation trajectory in front of me. I have to set out a medium-term fiscal consolidation plan.
So one area that successive governments have not really touched is the agriculture tax, and you spoke about it in the past. Do you think that could be a reality anytime soon?
It is not a question that's pertinent for the budget, because agriculture, there's a 7th schedule to the Constitution. Under the 7th schedule to the Constitution, the taxation of agricultural income is completely a state subject. So it is up to the states to decide whether they want to tax agricultural income or not. Some states actually do tax plantation income. So it's not quite the case that agricultural income is not taxed. There is also the issue that if I decide not to tax agricultural income, it becomes very difficult to tax the non-agricultural income of farmers. And indeed, non-agricultural income of farmers should be taxed. Do I personally think that agricultural income should be taxed? Of course, I do think it should be taxed, because after all, when there is income taxation, that happens only for those who are below a threshold. And there were the Vijay Kelkar calculations then, and I don't think anything significantly would have changed, which showed that at the rates, at the thresholds prevalent then, 95% of farmers would be below the threshold in any case. There is, of course, a relatively minor issue, which is that agricultural income can often be volatile. So should I tax one particular year's income, or should I average it out over a block period of 3 years or so? So the answer is yes, that's fine. One line answer, I think it should be taxed. 2, it has nothing to do with the budget, because it's not an union government area, it's a state government issue.
Fair enough. The other thing is post-pandemic. In fact, before the pandemic itself, the world was becoming more and more protectionist, considering all this geopolitics, China and all that. What do you think is the way forward for India?
You're almost suggesting as if India has any degrees of freedom. India does not have that many degrees of freedom. India has always officially held that India believes in multilateralism, which means the WTO route. The WTO route, unfortunately, is in a bit of a limbo now. It does not seem to be surfacing. Even preceding the recent bout of protectionism, the world was being splintered into regional agreements. And I'm not, even if I use the term free trade agreements, I don't mean a classic free trade agreement, because many regional trade agreements now transcend free trade agreements and cover services They cover cross-border investments because most of trade is linked to cross-border investments. Even before the pandemic, there were concerns in India that you should not be dependent on a single country for many of your needs, import needs. So if for any particular item there is a great deal of concentration on one particular country, that is not extremely desirable. And I'm of course thinking of China, and I'm thinking of pharmaceutical intermediates, I'm thinking of mobiles, I'm thinking of even something like solar panels. India has had a plethora of regional trading agreements, many of which were signed for non-economic reasons. There are major parts of the world which are major trading partners with which India did not have any such regional trading agreements. So if one is looking at the lens of regional trade agreements with the lens of economic rationale, there was a case for scrutinizing these regional trade agreements, asking what purpose have they served, because any such agreement involves a quid pro quo. I grant market access, which typically means lowering manufactured tariffs. In return, I get something which is primarily in the form of cross-border movements of services and market access there. So it's a legitimate question to ask, is in that basket of earlier regional trade agreements, have the gains to India been commensurate with what was expected? And the answer clearly is no. And what these regional trade agreements also do, they mess up completely the effective rates of protection vis-a-vis the MFN rates. As everyone knows, therefore, the trouble with getting out of the regional trade agreements is most regional trade agreements do not have a satisfactory exit clause. I'm talking about the existing basket without compensating the trading partner. So that getting out of them is not very easy. As everyone knows, India has now been negotiating, is in the process of negotiating, and has done some of them, trading agreements with major regional partners. I'm particularly talking about Western Europe, I'm particularly talking about North America, I'm talking about even a country like Australia. Parts, geographical areas that are major trading partners, and the intention in all of these is not to restrict them only to trade, but to cover also cross-border investments. And one of the things that has happened as a result of COVID, it predated COVID, is the intention of Make in India, which the idea behind that is not protectionism. The idea behind that is to encourage manufacturing in India, to encourage India becoming a part of the global supply chain, to wean away investments, not existing investments from China, but incremental investments that might have happened in China and might be tempted to go to Vietnam or Bangladesh, to try and attract them to India. And part of that is the PLI, although the initiative predated PLI. It's a bit early to tell, but certainly the fragmentary data tends to suggest that in some sectors, India is now becoming part of that global supply chain.
Sure. Anything more that can be done to capitalize on this China plus one opportunity?
You see, there are two kinds of things. The first thing is you generally improve the business environment.
Right.
That's a general across the board phenomenon. In across the board phenomenon, there is a long list of what the government has done, what it is attempting to do in terms of simplifying procedures, in terms of building infrastructure, which no longer means just railways, but roads also, integrating it with the Sagarmala project. These are across the board initiatives. One must realize, of course, that when one is talking about this in the context of the budget happens on only one day in the year. It's not as if the government ceases to exist on the other days of the year, nor is the case that everything is completely under the purview of union government. Because a lot of issues connected with investments, domestic and foreign, have to do with state governments and how welcoming they are vis-a-vis investments. Beyond that, there are the sector-specific interventions. PLI is an example of that. One needs to be a little bit careful with sectoral interventions, because all sectoral interventions, almost definitionally, they lead to distortions. So the ideal world is one when one is doing across the board improvements, ease of doing business if you like, and one limits the subsidies, because at the margin, all the studies showed subsidies don't matter. So the subsidies should be limited to the extent that they are necessary. They should be incremental, bearing in mind that you do not want to create distortions.
Sure. So what are your thoughts on PLI? I mean, it's a necessary?
No. The PLI, the objective behind the PLI has to be very clear. The objective behind the PLI is to encourage manufacturing in India. To encourage India becoming part of the global supply chain, which means to encourage investments, which means to encourage not only domestic investments but also foreign investments. Foreign investments also lead to the development of the supply chains, of the ancillary networks. The mobiles are a good example of that. One outstanding success of the intervention, which is pre-PLI in some sense, and it's also very difficult to statistically decontrol and say this has happened because of PLI and this would not have happened in the absence of the PLI. So that is the primary objective, that we want to encourage the investments, domestic as well as foreign.
Fair enough. Now, the question I was asking is, there is this 5%, 6% gap, which is what the government is really inefficiency, if you may call it, of doing business in India, which is what is being bridged through the PLI. And the hope is that over 4, 5 years or 6 years, that gap would get bridged, and therefore those businesses.
Let me state it differently. You see, no such scheme, apart from the across the board reforms, no such scheme can be open-ended. Has to be definitionally close-ended. Chinese prices are not very transparent. Despite China being a member of the WTO, its pricing, internal pricing, and I mean pricing in all of its different forms, and border pricing has not been very transparent. Having said that, on an average, it differs from item to item, on an average, the Chinese cost of production is 50% of the Indian cost of production. Why is that the case? Sometimes it's even lower. Why is that the case? At one level, it is the non-transparent pricing. It is the subsidies, implicit subsidies that are built into the system. At another level, it is the scale of production, the volumes. And therefore, to eliminate this cost disadvantage, what is necessary, and this is a byproduct of the PLI in some sense, is that you need to generate large enough volumes of production. And historically, very few companies in India have had that large enough scale. So you need to get those volumes, you need to get those economies of scale and scope, which almost underlines the fact that you need to get foreign companies in, not only for the managerial efficiency and the technological efficiency, but because they enable you to tap into their marketing and distribution networks, and they enable you to use India as a source, as a location for exporting elsewhere.
Sure. So one last question. In terms of monetary policy, we are really at an interesting point in history across the world where, the Western world is experiencing very high levels of inflation. We are far more muted than that. And therefore, the compulsion on their part to raise interest rates is a lot higher than ours. And in the last 15 years, if you see right now, the interest rate differential between India and US is really at the lowest ebb. So what does this mean for the rupee? And do you see greater risk to the rupee going forward? Will this manifest in that way? And the second question, corollary to that is, so far the government has resisted making tax tweaks to ensure that India gets into that global index and that debt part of foreign flows come into India. Are we at a stage that that will become necessary at some point?
On the last, it has been a proposal for some time. Let's just wait and see what the budget does. It's more important as a signal, probably less important right now in terms of its quantitative importance. So far as the exchange rate is concerned, you said exchange rate, but you primarily mean the rupee vis-a-vis the dollar, because the rupee has actually appreciated vis-a-vis some of our competing currencies. On the exchange rate, there is a normative part and there is a descriptive part. The normative part, of course, argues that if there is a differential in the rate of inflation, then the rupee should depreciate to ensure that exports remain competitive. And exports of services are also price elastic, perhaps not as much as exports of goods, but they also tend to be price elastic. The problem with this is that any such normative argument that the rupee should depreciate vis-a-vis the dollar is completely neutralized by capital inflows. And after all, despite Reserve Bank intervention, at some level the value of the rupee vis-a-vis the dollar is market determined. The challenge for RBI is, how do I ensure that the secular trend of depreciation or appreciation, as the case may be, is not controlled, but the volatility around that is muted through the intervention. And intervention, by the way, whether it's in terms of buying dollars or selling dollars, has costs. Neither of this is costless. So far as today is concerned, the question to ask, and I'm not really talking about today, in general, the question to ask is, India is going to be a capital scarce country. If India is going to be a capital scarce country, what is likely to be the real rate of interest in India? And I underline the word real rate of interest. I'm not talking about the nominal rate of interest, nor am I getting into considerations about which interest rate to take. Is it the repo rate, it is the lending rate, is it the borrowing rate, which one it is? Depending on the assumptions you'd make, you'd probably say that the real rate of interest in India, real again, should be 1.5% to 2%, the real one. And if you add the inflation rate to it, you get some indication that there is a lot of inefficiency in the financial sector, because the gap between the lending rate and the borrowing rate is still inordinately high. But coming back to your question, is, of course, there is going to be a volatility. There is going to be volatility in capital inflows, especially if they are not of the FDI kind, and therefore there is a challenge for the central bank to manage this, to manage the exchange rate, and also correspondingly to manage monetary policy.
So thank you so much, Dr. Debroy.
Thank you.